Every morning this week, we are featuring different speakers from 8 a.m. to 9 a.m. Eastern Time. And as a reminder, this webinar will be recorded and emailed to you. This week, the Trading Pub has also launched a special Nadex trading contest. This is a unique trading contest designed to reward trading consistency. We've had many contestants who have been given a $2,000 demo account, and the goal of this contest is to see if traders can make $80 per day for a week on a $2,000 demo account. And if you can do that, that's trading consistency. If you do that, your demo account will grow from $2,000 to over $2,400, which represents better than a 20% account growth in just 1 week. So really quickly, before I get started, I put out a question, but can I get a show of hands for people, a yes or no, whether you have ever traded Nadex before? Or whether you currently contract? Yes, yes. I see several people that have been on the call this week. So we have, Claire says no. Okay. All right, good. Well, I'm going to start with a quick overview. And today I'm going to be covering the hour. We had another speaker that was scheduled to come in, but there was a conflict. And what I'm going to be doing today is covering an introduction to Nadex. I'm going to be doing market commentary for today, and then I'm going to go over a couple of Nadex strategies. So let's get started. First, take a quick second to take a look at our trading disclaimer. Binary options involves risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. And remember that past performance is not always necessarily indicative of future results. We have a working relationship with Nadex, and they've asked us, because of their compliance regulations, that anything I do, if I trade against the markets, everything I'm going to be doing today is going to be traded in a demo account, and the demo account is the exact, it has the same functionality as a live trading account. Trading Pub provides free trading education for stocks, options, futures, Forex, and Nadex. And we have recently, over the past year, put out 2 books on how to trade with Nadex. One is called Trading Made Simple. The other one is called Nadex Warriors. And between those 2 books, you have 22 strategies on Nadex with multiple assets, different time frames, and different people's views on how to trade this particular exchange. A little bit about me. I'm the Content Partner Relations Manager for Trading Pub, and what I'm responsible for doing every day, I work with leading experts with stocks, options, futures, Forex, and Nadex, and we publish ebooks, on-demand videos, e-magazines, all kinds of information with trading strategies on all of the instruments that I've talked about. I review content that comes in, I review strategies, I proofread, and basically package them, and we provide those free to our members. Trading Pubs, I'm also Trading Pub's in-house Nadex expert. When I first came on board with Trading Pub in June of 2014, my first assignment was to get familiar and learn Nadex, and I've been doing it ever since. I love trading on that platform. Every month I put out something called the Probability Report newsletter, which lists all of the upcoming free Nadex webinars, as well as videos and articles that I found or written about Nadex. I'm a weekly contributor to Nadex's blog, and I'll show you that a little bit later. I also submitted articles on Nadex for Benzinga, bar charts, and other financial websites. So here's Nadex in a nutshell. When you trade on the Nadex exchange, you are making a decision about where you think the price of a market will settle relative to a strike price within a defined time period of your choosing. I'm going to repeat that. When you trade on Nadex, you are making a decision about where you think the market's going to be relative to a strike price within a defined time period of your choosing. Nadex is a CFTC-regulated exchange, and as an exchange, what they are doing is facilitating transactions between your opinion about the price of where a market is going to settle within a time frame and someone who has an opposing opinion of where that price is going to settle. You think something is going to go long, the other person thinks it's going to be short. Nadex matches you, and they don't take positions on either side of a trade, and that's the way exchanges work. So Nadex binary options have been called yes or no trades. Each trade has a maximum value of $100 per contract traded. That means the absolute most you can win or lose on any contract that you trade is $100. You always know your maximum risk and your maximum reward before you place a trade on the exchange. And what you're doing, once again, is making a decision about where you think the price of a marketplace will settle relative to a strike price within a time period that you have chosen. As long as that trade is active within that time period, you cannot get stopped out. You can hold your trade until expiration and collect the full reward, or you can exit early and lock in profits or minimize losses if a trade is working against you. So let's take an example of how binary options might work. Let's assume it's 12 o'clock noon Eastern time, and the current price of gold is at 11.15 and it's climbing. And you like to trade gold, and you have a high probability strategy for trading gold futures. All of your indicators and your strategies agree that gold is on an uptrend and it's going to continue heading north, maybe 116, 118, 120 or above. And you believe that gold will not go down by 1:30 when the pits close. If you believe that gold will be above 1110 by 1:30, and there's a Nadex strike price available at that 1110 strike price, the marketplace is probably going to agree with you. It's at 11:15 and it's climbing. They might determine that there's a 70% chance that that's going to be right. And if that is the case, what you would do on a binary options trade on gold that day would you would risk $70 to make $30 on that high probability trade. If it settles above 1110, you're going to collect $30 profit on $70 risk because it was highly likely that that was going to happen. Now let's assume you're a contrarian and you felt that gold is at 11.15 and it's climbing, but it's going to reverse. And when the pits close, it's actually going to settle below 11.10. Well, at 12 o'clock noon and it's 11.15 and rising, the marketplace probably will not agree with you. And they're going to determine that there's a 30% chance the marketplace is going to reverse and settle below 11.10. If you took that trade, you would be risking $30 to make $70 on a lower probability trade. And if the market did indeed reverse and settle below 11.10, then you'd be collecting a $70 maximum reward on $30 risk. Okay, so that's the general idea. Does that make sense so far? Just type in a yes or a no. Support says yes. Yay. Phil says yes. Okay, good. So I pulled up a chart a couple days ago on Tuesday. This is a 5-minute binary option. So you can trade very short time frames with Nadex. And it was on the pound dollar. And what I'm showing is a 1-minute chart of the pound dollar. And the very last bar, this bullish green bar, represents the first 1-minute candlestick in that 5-minute trade. There are 4 more bars before this thing expires. And can you notice how the marketplace is just sitting right on a strike price? If you look all the way over to the right side of the chart, Nadex has strike prices at various intervals. And the market is sitting right on a strike price. So my question to the audience is, within the next 4 minutes, do you think that this marketplace is going to settle above or below that strike price? Type in A for above, B for below. Anyone? Tom says above. T says above. Anyone taking below? Okay, well, in reality, since the marketplace is right there, there's an even opinion, there's a split decision. About 50% of the marketplace of buyers or sellers believe that the marketplace will settle above, and this red line here is the expiration. There's 50% that believe that the marketplace will settle above this line, 50% that believe that it'll settle below. So you would be trading in round numbers about $50 to make $50 for a one-to-one risk reward. So for those who think that the marketplace will settle above this strike price in the next 4 minutes, you would be putting 50 at risk. And what would happen with Nadex is the minute you place that trade, $50 would be deducted from your account. You'd be matched with a seller with an opposing viewpoint. And if you were in the money successful, Nadex pays out $100, so you net a $50 profit. And if it goes against you, then the person with an opposing viewpoint would collect $100 and you would collect nothing. That is the nature of a yes or no trade. This is also called an at-the-money trade because the marketplace is evenly split. The marketplace is right at the strike price, and at the money, there's pretty much an even mix of people that have opposing viewpoints on either side of the line. Now, with Nadex, you can trade anywhere you want to on the chart as long as there's a marketplace of buyers and sellers. So I'm going to move up to this strike price up here, and I'm going to put an up or down arrow. You got 4 minutes left in this trade, right here. How many people think that the marketplace will actually move its way up and settle above this line in 4 minutes? Will it settle above, yes or no? Phil says no. Anyone else? No. Okay, well, the marketplace up here agrees with Phil and Claire. The marketplace is saying, we don't think that's going to happen. And in fact, they're saying, if you actually do believe it's going to settle above there, your risk is going to be $26 to make $74. And for all of those who believe that the marketplace won't go above that line, your risk would be $83 to make $17. Remember, everything is packaged in $100 increments. So you might consider that a heck of a lot of risk, but if you're dead certain that the marketplace is not going to make it up there, and the likelihood is probably pretty low, that $17 can be perceived by some as fairly almost a sure thing. Nothing's sure in trading, but the probabilities are heavily in your favor, and you're going to assume more risk for a smaller reward. Conversely, if you believe that it's actually going to move up that high or break up or move up to this resistance level up here and make a sharp resistance level and make a sharp move up here, then you're going to assume far less risk for a much greater reward. Now I'm going to move down to the lower end. I'm going to take a look at right here and right here on this strike price. How many people think that the marketplace is going to make it all the way and breach this line right down and close below this line within 4 minutes? Clara says no, it's not going to do it. Anyone else? 4 minutes. Will it continue this downtrend that it's on and dive? Phil says no. Peter says it will. Okay, so The odds are, within 4 minutes, the marketplace is saying down here is that if you think that it's going to expire below this line, you are going to assume $22 of risk for a potential $78 return. And if you believe that it's going to settle above this line right here, then you're going to assume $88 risk, excuse me, for a $12 reward. So at the money, it's 50-50. If you're up here and you think it's going to go above this line, you're going to assume less risk. If you think it's going to be below this line, you're going to assume more risk. Down here, if you think it's going to settle below, you're going to assume less risk for a greater reward. If you think it's going to settle above, you're going to assume more risk for a smaller profit. So let's see how this trade actually wound up playing out. So the market wound up settling between those two lines, and it settled just below the at the money strike. So if you risked 50 to make 50 right here, and you were a buyer, you lost. If you were a seller, you won 50. If you thought the marketplace was going to go above this line here, then the money that you put up at risk, it didn't happen. If you sold and assumed that $88 risk or whatever it was for a $13 reward, you were good. If you worked from this strike price down here at the bottom and you bought from the strike price, you assumed $88 risk, you picked up 13. If you sold from down here, you risked less, you risked $22, but it didn't work out for you. There are strategies for at the money, in the money, and out of the money trades covered in both of those books, and I'm going to actually talk about some of those today within the next hour because we've got some interesting economic news coming up, and I'll show you how I'm going to take a look at those particular markets. Is this all making sense? I'm pretty comfortable with this subject matter, so I want to make sure that I'm not losing anybody. Great. Okay, moving on. A little bit more about Nadex. It's a North American derivatives exchange. It's a wholly owned subsidiary of the IG Group, which is listed on the UK FTSE Index. It's based in Chicago, and it's subject to regulatory oversight by the CFTC. When you trade on Nadex, you are not trading through a broker. You place your orders directly on the exchange, so there are no middleman profits. Your member funds are held in a segregated bank account in the United States. You have full transparency on every trade. Nadex does not take positions in the market for or against you. When you trade with Nadex, you're trading against somebody who has an opposing opinion, just like any other exchange. Nadex was previously available only to legal residents of the United States, Canada, Mexico, and U.S. territories, but it's now available in 47 countries. So when you place a Nadex binary options trade or a Nadex spread trade, everything starts on your opinion on where the market is heading. You can choose from Forex pairs, stock indices, commodities, and then you select the asset you like to trade. Maybe it's the euro dollar or the pound dollar or the E-mini S&P futures, or maybe you like to trade crude oil. You next select the expiration time frame that you're most comfortable trading in. You could trade for the weekly expiration of an asset. On Monday, you could say, hey, I think gold is going to trade below where it opened on Monday. And you could have an expiration that ended at the end of the week when the pits close. You could have an end of the day expiration. You can trade with hourly expirations. And for some assets, there are 20 minutes and 5-minute binary options that are also available. Next, what you want to do is select the number of contracts you want to trade. Determine the price that you want to pay for that contract, and then place your orders directly on the exchange. Once your trade is live, you can let it ride until expiration and collect the maximum reward, or you can close your position early and lock in profits, or minimize losses if the trade is working against you. So with Nadex, you can open up a 2-week demo account free of charge, and it'll be funded with $25,000 in play money, and you can use the complete functionality of that platform. When you decide to actually fund a live account, the minimum funding is $100. So you don't have to have a tremendous amount of money to fund a Nadex account. You don't work through a broker, and the way Nadex makes money is by charging exchange fees of 90 cents per contract per side. And so it's $1.80 round trip, and the maximum exchange fees are $9 per contract per side. So if you trade 10 contracts, 10 times 90 cents is $9 to open a contract, and if you exit or it settles successfully, you'd be charged $9 to close that contract. That's on 10 contracts. So your maximum round trip is $18. If you traded 20 contracts, 50 contracts, 100 contracts, the maximum round trip exchange fees would still be $18. So there are some economies in terms of the fees you have to pay to trade on Nadex. If a contract expires out of the money, you place that trade, let's say in that previous example, let's say you bought an at-the-money thing and you were convinced it was going to be right, but it moved against you and you couldn't get out, and it expired and you lost your $50. You're going to get charged an execution fee for getting into the trade, 90 cents per contract, but not the settlement fee. So, I mean, you had a trade that worked against you, but one of the nice things about Nadex is you're not penalized on a trade that expires out of the money. You're only charged for getting in the trade, but you're not charged the round trip settlement fee. So, quick summary. Binary options are based on a simple yes or no proposition. You have limited trade risk. You always know your risk reward before you place a trade. You can trade multiple markets, the markets you're most comfortable in the time frames that you're most comfortable in. You have spike protection. As long as that trade is live, you cannot get stopped out. So if a market gets super whippy on geopolitical or economic news, you're not taken out of the trade unless you want to get out. It's a regulated exchange. It's subject to strict oversight by the CFTC, and your funds are held in a segregated U.S. bank account. Very easy to make deposits and withdrawals on the Nadex exchange. Okay, today's economic calendar. I'm going to take a quick sip of water. In 5 minutes, we've got continuing jobless claims, FOMC, Bullard speaks. So there's some Fed announcements, 9:15, 9:30, 9:50, Bloomberg Consumer Confidence. Jolt's job openings at 10 a.m., 10:15, we have another Chicago Fed president speaking. 11, we have crude oil inventory reports. I'm going to be taking a look at the jobless claims and the crude oil inventory reports later on today. And I'm going to jump right into, since we only have a few minutes left, 5 minutes left, I'm going to jump into the markets and take a look at a couple of things that we can do with the jobless claims. One of them is going to be, I'm going to take a look at trading an out of the money trade on the dollar yen, and this is in a demo account. And news reports are released at 8:30. I'm going to choose the 7 a.m. to 9 a.m. Time frame. So I'm only going to have a half hour on this trade. Now, markets generally tend to trade kind of choppy going into major economic news, and you can see that the dollar yen is trading sideways. And this is my strike price ladder. I'm going to go up here and I'm going to buy this market above. I'm going to strangle this trade. And I'm going to select one contract with $20.75 risk. And hopefully that will, what? And then I'm going to go below the market, and I'm going to sell it with at 82.50 with an $18 risk. Let's see if I can get these puppies to fill. They're both pending markets because, excuse me, they're both pending. Okay. You can see up here on the upper left that this is live right now. And let's see if my one on the bottom. Okay, both of those trades. I'm going to get rid of something right now. I'm going to get rid of my MACD and my stochastics. So what I'm looking to do in this particular trade, I'm going to just go to a different time frame and blow this up a little bit. Okay, you can see I've bought above this strike price and I've sold below this strike price right here. And I've assumed about $20 of risk on either side of this. So I've got $40 maximum risk in play for a $60 return. And in 1 minute, the jobs reports are going to be released. And this marketplace, if it's a shocker, I'm expecting movement in the financial markets. I'm expecting to either fly up this way or dive down this way. And what I want to have happen at the expiration is I want the marketplace to either settle above here or settle below here. I don't care. One of these, for this trade to be successful, one of these trades has to win, one of them has to lose. So if the marketplace dives on me, I had $20 risk, I had an $80 return. I have to subtract the $20 I risked up on top that I lost for a $60 per contract net gain. Does that make sense? I do the same thing also. I employ the same strategy on the crude oil inventory reports. They are seldom accurate. And when they miss big. And I bracket the market before the news with a buy, risking very little above, and a sell, risking very little below. And I wait to see what the market's going to do. It's 7:30. Let me see what the how the reports actually came in. You know, in doing this thing live, let's see, 21.74 was a bearish return. But it wasn't really huge. It wasn't a real shocker. 276. Okay, if it's not a really big move, it may not move the market much at all. So I just need here. It's starting to dive. Now look, you can see my bottom trade is starting to go into the positive end. It's up $2, $3, so on and so forth. I need this thing to continue to move down in the next 28 minutes. I need this market to keep grinding its way downward. But the thing is, it doesn't have to necessarily cross that line. Once the marketplace gets into around this area here, my lower trade may be good enough that I can exit it and still account for this loss and still be to the good and profit. What I like about doing these particular strangles is it's not going to work all the time, but I really don't have a lot of money at risk in the market. And also, if I'm going to move to a different time frame. I'm on a 1 hour chart here. I'm going to move down to a 5-minute chart. Yeah, I mean, this marketplace dove down. It's kind of at a doji right now. And here's our expiration. Now, one of the things that I can also do on this trade, if I don't like it and it's still kind of waffling sideways, I can always decide I'm down $4 on 20 risk up here. I can always decide, hey, let's get out of this trade. I don't like what I'm seeing. I'm down 7 here out of 20. Let's cut my losses short. Based upon what you guys are seeing right here, would you stay in this to hope for movement one way or the other, or would you just bail and call it and wait for another day? Stay in or get out? Phil says out. Yeah, I mean, I don't think that this moved much of the needle at all. So I'm down $6 here. Let's cut bait. And I'm down over here. Okay, that one's been taken out. Okay, that one got taken out also. So the bottom line is instead of losing the 40 risk, I lost about 13. So no harm, no foul. And if this trade decides it wants to get really excited and jump, you know, that was a decision I made. But what I demonstrated here is that you can manage a trade and get out. You are not stuck once you make a trade till the time frame. So I put $40 at risk to make 60. The market didn't react to the jobless claims like I thought they would, but I wasn't out 40. I was out 13, and you know that doesn't hurt as bad. So what we've executed today, in a perfect world, I would have had a great, I would have had a great trade. The market would have reacted, and I managed to minimize my loss. I didn't gamble and stay in. I got out. All right. Let me close this. Let me close this guy out. All right. I go back and go through a couple more slides really quickly. And I'm going to talk about some other. On the Nadex, one of the things that's hard to see when I demo Nadex, because the screen is just too small for you to see, they have a Nadex Finder. And there are multiple indices you can trade. You can trade the Chinese Hang Seng at night, the FTSE 100, that's the UK index, the DAX, the Nikkei, NASDAQ, E-mini S&P 500s, US Russell 2K, Dow futures. There are a lot of Forex pairs you can trade: crude, silver, gold, oil, natural gas. There are 20-minute binaries that you can trade during the daytime on the U.S. indices and at nighttime on the Nikkei. They're event binaries. So event binaries are kind of interesting. I don't trade them that much because I just don't have a plan for doing them, but I'm going to go back to Nadex. I could have traded where I thought the jobless reports were. And once again, let's see, what were they? They were 276. Okay, was the report. So I could go under event binaries, and I could go to jobless claims, which were today. And I could have said before the news, I believe that 270 was forecast. You could say, I want to buy that proposition. I think jobs will be above 270. If you did that, you would have been risking 50 to make 50, and you would have been right. If you thought the jobless claims would be below 270, then you would have lost 50 to make 50. And you can go up or down that chain. You could have made a proposition on 280, 290, 260, 250. There are some folks that like to trade the news events. Once again, I haven't looked at it long enough, but it is a way to trade an index. Justine says, I see you're using Nadex and I'm a little late to join today. Do you use any other platforms? Any other platforms to trade Nadex or for this or in general? In general. No, Justine, no, I work with Trading Pub. I mean, I do a lot of review on stocks, options, futures, Forex, and Nadex. But I'm the in-house Nadex expert, and that's all I trade. I use the strategies that I see from leading stocks, options, futures, and Forex experts, and I look at it through a lens to see whether I can trade binary options or spreads. And the reason why I like doing that is, and in terms of charting platforms, I don't use just the Nadex charts. I use Thinkorswim and I use NinjaTrader to take to do analysis. So once again, I might take a great strategy for buying or selling a Forex, for example, or crude oil futures, and I make my analysis on Thinkorswim or Ninja, and then apply it to Nadex. In fact, I'm gonna see if I can. Okay, for example, here's a Thinkorswim chart on the Russell 2K, the TF, and one of the speakers this week, Sean Jans, who will also be on tomorrow to wrap up the week. This is his workspace that he shares daily, and he paints in the value area box where all of yesterday's trades occurred, and he even plots in key support and resistance lines. And so on Thinkorswim, right now the TF is this is a 15-minute chart. It's just hit a low. Oscillators, the Fisher indicator, is still showing that it's on a downtrend, moving from value area low. Let me grab my little marker. This is the value area low. The marketplace right now is still cycling a downtrend. It's just hit a low. It's not showing any bounce back yet, so it could continue to travel all the way down here to this deviation level, which is -5. And, you know, we have about, I don't really play much with trading the U.S. indices until the opening bell, unless I see a really, really clear move to close an opening gap. So just to answer your question, Justine, I do use other tools to make decisions with Nadex. All right. Going back to my presentation. A little bit about my trading plan. I trade a small account. I funded it with less than $2,000. I use the best trading risk management I can. I never risk more than 5% of my account on any trade for any reason. I test every strategy that I trade and get historical data on its probability of success. And I never risk more than my probability of success. So I don't have a problem risking $70 to make $30, but I need to know that the strategy that I'm trading that day has an 80% or greater success rate. If I'm risking 50 to make 50, I need to know that I've got a 60, probably 70% greater success chance of that strategy working. And to do that, I do all kinds of things. I look through multiple time frames. If it's a pattern trade, I take a look at the recent historical success for that trade. And before I put anything at risk, I need to know in my mind that the odds are on my side. I've got a lot of trading strategies that you can see when you go to tradingpub.com. I have my trading plan published up there. From 7 to 9 in the morning, I like to trade the DAX. I have a 2-hour trade for that works great. From 9 to 11, I've got one for the FTSE 100. From 11 to 1, I trade one on the US 500, and I've got different names just to keep them right in my head. The German one is the Strudel. The brunch strategy is the FTSE. The pastrami is the 500. There's an afternoon delight strategy that I trade on the pound dollar or the euro dollar that takes advantage of the market quieting down, usually after around 2 o'clock or 3 o'clock Eastern time. From 8 to 10 at night, I trade the Japanese 225 index if I feel like trading at night. I've got a strategy for that. I trade the crude oil news, inventory reports, sometimes the natural gas reports. I like trading the non-farm payrolls, FOMC reports, using the same type of strategy that I used earlier on the employment report. And if you go to tradingpub.com, I'll get to that a little bit later, you'll see some of the links and resources that I use. So there's basically a full day of tested high probability trading opportunities that I like to trade. So we've got about 15 minutes left into this. So I'm not going to go into detail, but I'll go into one. This is it's what I call a controlling track candlestick strategy, and it works for a lot of markets. This is the Japan one. Now, daylight savings just kicked in, and I usually trade from 8 to 10, but it's now 7 to 9 on the Nikkei. What happens is the 7 p.m. Eastern Time hourly candlestick will normally control the 8 a.m. candlestick. And what I mean by that is, if you look here on the left side right here, that candle is bullish. And what I mean by controlling candlestick is that there's a high probability that the following hourly candlestick, if this is developed bullish, will not threaten or significantly breach the opening price of this candlestick. And what I do is I choose, if it's bullish, a strike price with a little bit of rope underneath the opening candlestick, and I buy it, with the idea being that this strike price will not be threatened. Next candlestick, we have a doji. If I see a doji, I wait to see how the following candlestick develops. If it starts to develop bullish in this case, then I will buy below this doji and let it go. Here's a case where it actually lost. The strike price was right here. The 9 p.m. candlestick developed bullish, and it actually wound up losing that day. I'm sorry. Strike price had to be there. I was going on historical data. Once again, here, bearish, bearish, sell from above, you're good all day. So you can pull up the hourly charts and take a look at the 9 p.m. Hourly bar on the Nikkei, and you will see this pattern develop with a high degree of consistency. The only thing you want to watch out for on this particular type of strategy, by the way, I use the same methodology when from 7 to 9 on the DAX. I use it from 9 to 11 on the FTSE, and from 11 to 1 on the E-mini S&P futures. It repeats itself a lot, and what you want to do is you want to go back over the past few weeks and make sure that the pattern is holding. It tends not to work as well if the VIX is going haywire. If the VIX is trading between 12 and 14, 12 to 15, these pattern trades have a tendency to work really, really well. If the VIX is trading 20, 30, 50, or whatever, watch out, because all bets are off. So this is what I mean by the VIX. This was a daily chart for the VIX, and you can see that for many, many weeks, the VIX was in this beautiful range right here between 12 and 14, 12 and 15 really. And then there was some uncertainty in China, and the VIX shot way up here over 50. That's crazy stuff. And a lot of plans, it kills a lot of indicators. I mean, when the markets get that whippy, a lot of plans just go out the window. So for a lot of the strategies that you'll see in my trading plan, if you go to Trading Pub, I just keep an eye on the VIX. And the other thing I keep an eye on is the E-mini S&P futures, because a lot of those markets, the DAX, the FTSE, have a tendency to track with the S&P 500. Not exactly tick for tick, but it's close enough to use the S&P 500 futures market as a confirming market. Okay, I'm going to move on because I'm really coming out of time. I got about 10 minutes left, and I want to leave the floor open to some questions and answers. In summary, binary options can give you a trading edge. You can trade outside of normal market trading hours, forex currency pairs, some of the indices. You can you have managed risk. You always know what you risk before every trade. So you can't have a margin call with Nadex. You can't have anything happen. You know exactly what you're putting up at risk. And if you have a good trading plan for forex futures, you can really you can do quite well with the security of knowing that you're not going to have a stop blown out or a margin call or anything. So if you're that type of trader, it can work quite well for you. You can scale your positions. You know, a lot of people think, you know, $100 per contract, you know, you made $17 per contract or $20 and so on and so forth. Well, that's on one contract. You can trade 10 contracts and scale that and get $20, $170, $500 on a trade. All of the Nadex charts and the platform is free to use. The data, you don't have to pay for data feeds. It's available in 47 countries. You can open Nadex up for very little as $100. And there are a lot of trading resources that are available to you. finally, I'm going to get to some Nadex resources that you can get to. First of all, if you want to open up a Nadex demo trading account, it's free for 2 weeks. Go to tradingpub.com/demo. You can fund a live Nadex account by going to tradingpub.com/Nadex. And once again, you can fund it for $100. You're not asked a lot of questions. They're just some general questions that are asked. It's very easy to open up a live Nadex account. At Trading Pub, I'm going to pull up our website. You can go into free education for futures, options, Nadex. I'm going to choose Nadex in this example. And a lot of videos, blog posts that I've written are archived up here. So if you want to find out more about that strudel strategy I talked about, you can click on it. I detail the strategy, I break down a trade, and I even give you and it's all free. Also, binaryoptions.nadex. This is new. This is Nadex's blog site. I publish blog articles. They update new articles every day. I publish and write for them every Monday and Wednesday. So here was my trade on the FTSE, the index the other day. That was something that I just talked about. And I give a brief explanation about the trade, where I saw the setup, how it played out on the Nadex charts, things to take a look at. And I basically try to go soup to nuts on a trade, what I was thinking was, and how the trade played out. And you can find that at binaryoptions.nadex. And finally, Nadex also owns a website called Market Deal. And some of you that don't trade Nadex, there are excellent resources up here. You can click on any one of these. These are all free ebooks and projects that we've done, and we put out about 3 a month. So if you're a Forex trader or a futures trader, or you want to find out more about indicators or a trader's best or worst experiences or how to trade overnight, there is a book or a series of on-demand videos that may fit who you are and your trading style. And it's all free compliments of Trading Pub. And the information that's published in here comes from the best speakers in stocks, options, futures, Forex, and Nadex. Contributors and guests on CNBC and Fox Business News and Bloomberg and so on and so forth. So in the last 5 minutes, I want to ask, are there any questions for me about Nadex or how I trade or what I think crude oil is going to do or the weather in Texas? I want to also apologize today for my raspy voice. The allergens are out of control here in Austin today. Questions, anyone? Was this helpful? Or do you feel like you learned something? Thanks, Ashif, Phil, Marianne, T. Any questions about binary options or spreads? Tell you what, I got a couple minutes left. I'm gonna go back to Nadex, and I'm gonna pull up a chart, and I'm gonna talk about spreads for a second because that's another way to trade Nadex, and it more closely mimics traditional trading. I'm just going to pull up a chart on the Aussie yen just because it's the first thing I saw. Okay. So here is a 5-minute chart. I'm going to move actually to about a 15-minute chart on the Aussie yen. And I'm going to reposition this chart a little bit. Okay. So this is on a downtrend right now, and let's assume that you think that the Aussie yen has got room to move. It moved up a whole lot, and now it's coming back down. And let's assume that you think this market's going to continue to drop. What you do with Nadex spreads is a Nadex spread will draw a box around the market within a defined time frame. God, that's the worst box I've ever drawn. The ceiling and the floor of that box represents, this might represent 200 pips, where every pip equals $1 per contract. So what you would do trading an Nadex spread is you might look at selling the marketplace where it is currently. And let's say that this area up here, let's say there's about 100 pips this way and 100 pips on this side of where you want to get into the market. Every pip above this line is risk. Every pip is below, but your maximum risk is 100 ticks or $100. Your maximum reward is $100. And you can exit anytime you want. You could say, hey, my stop loss, I'm going to stop myself out at 20 ticks, and I'm going to take profit at 40 ticks. You can do that, and the trade is live. You cannot, this is basically a psychological stop. It's not a hard stop in traditional trading. So the market quickly did this. Yeah, you'd have a decision to make whether you wanted to get out, but if it whips right back down, which happens quite a bit, you didn't have a stop that was taken out. And marketplaces and markets can often make a quick move against you and then continue on the direction you thought they were going to go on. So that's basically a very crude drawing of a Nadex spread. And it's another way to trade Nadex. I talked about binary options, but the cool thing about spreads is it's not yes or no. You can kind of basically stay in tune with the marketplace, have a target to take profits, a target to take losses. So, and that's, I mean, you could go a whole another hour on just a presentation on how to do Nadex spreads. Does the market need to move a number of pips before you earn profit, Tom asks. Well, initially, yes, because there's going to be a bid-ask spread. So it might have to move about, 4 or 5 or 6 ticks before you're in the profit zone. But once you're in the profit zone, every tick is $1 a tick. And if you trade, 10 contracts and the marketplace moves 10 ticks, you're up $100. Very similar to Forex trading or futures trading without having to put up a few $1,000s in margin. So yeah, it's much easier to do that. I mean, and once again, with Nadex, you just want to, it all comes down to trading responsibly. Actually, can I talk about proximity and premium? Yeah, there is some time decay, like traditional options. There is some time decay in binary options, and I'm not an expert in that particular area. Just generally knowing that if in general terms, as a trade expires, if you are out of the money, it becomes more expensive. If you're in the money, it becomes more valuable. And so if you have a trade where you risked, well, you saw briefly earlier in my trade when I was doing the out of the money strangle, for a hot second, my sell on the low end became profitable. Well, if there had been 2 minutes left and the marketplace was moving toward that, that would have been worth a lot. It wouldn't have been worth the maximum value, but I could have gotten out of that and made money. Hey folks, we're wrapping it up. I'm about an hour into it. We need to get into our trading day. Are there any last questions? Abin says, how do I get a template on the value area? What I'm going to suggest that you do is log in for tomorrow's webinar. Sean Jantz at the Binary Trade Group, if you go to binarytradegroup.com, I'll type it in. You can join them for 2 weeks free of charge. You can join them for 2 weeks for free of charge. Sean Jantz actually develops a battle plan every night and shares his workspace. He paints all of that and shares his workspace with the support and resistant levels. And he's going to be talking tomorrow, and you can actually ask him directly how he does things and so on and so forth. In Thinkorswim, I mean, you can do a lot of those things manually, but Sean makes it so clean and so easy and shares it, and he even does a YouTube video every night that addresses his battle plan for the following day. He shares his chart, the workspace that you're going to be that he's going to share with you, and he tells you what he thinks the market might do against that particular chart. And I'm going to have him on as a special guest tomorrow. And once again, the trade that I did place today, I placed it on the jobless reports. I decided to strangle the money with two out of the money trades, risking a maximum of $40 for a maximum of $60. I was expecting market volatility, the marketplace to jump or dive on the news, and it didn't. The news didn't shock the markets. The market traded sideways on the dollar yen. I exited both trades for about a $20 loss, so I didn't have to take the complete $40 loss. I got out early because the marketplace didn't do what I wanted it to do. All right, folks. Well, the only other trade that I'm going to be taking a look at today, outside of what I normally do, which is to follow some of the indices and some of my other strategies, is I'm going to be looking to employ the same tactic on the crude oil inventory report at 11 o'clock Eastern time today. And about 5 minutes before that, I'm going to take a look at the market, and I'm going to buy well above the market and sell well below the market. I'm going to try to have no more than about $40 risk, and hopefully the marketplace will get shocked by the crude oil inventory news. Thank you very much for coming out today, and I hope you guys have a great day trading.